Welcome back, and it's time for the Word on Wall Street. Top investors watching your money. Joining me right now is Infrastructure Capital Advisors CEO Jay Hatfield and Michael Lee, strategy founder Michael Lee. Great to see you, gentlemen, this morning. Thank you so much for joining us. Mike, it looks like people have pretty much given up on a soft landing after the Federal Reserve's last 75 basis point hike last week. This week, we've got more economic data to give us a window into what's going on as we approach the end of the third quarter. But Mike, you know all the predictions that the fourth quarter is going to be tough, that 2023 is going to be tough. Look at the market this morning, down 235 on the Dow, down 89 on the NASDAQ after finishing down on Friday. Your thoughts?
Well, first, in terms of soft landing, the unemployment rate is still low. We haven't seen a blowout in jobs losses. So for the Federal Reserve, this is their soft landing. It seemed for a decade plus that their main economic indicator, which drove policy, was the S&P 500. It doesn't look that way anymore now that inflation has run out of control. I would say we are in for a bumpy ride. I would hope to get a little bit of a relief rally here and there. What's really interesting from my standpoint is historically, once we've rallied 17% off a low, you typically don't go back and touch that low, test that low, or make a new low. I would say that this may be the exception, and we are in historic times, so that may be something new that happens right here. I think what the real uncertainty is comes more from abroad with how their winter is going to go in terms of energy costs. I don't think anybody really has their arms around that. And then you have this massive dollar strength as the rest of the world's economy just seems to fall apart. And if there's one thing that stocks do not like, it is a super strong dollar that continues to get stronger and stronger. I would be starting to bottom fish right here in some of these big cap tech names. Goldman Sachs Prime Desk is reporting that a lot of these big cap tech names are better to be bought over the last few weeks, and so you have some major hedge funds starting to build positions in them. I mean, Amazon's down to 112, 113 bucks off recent highs of above 140. So if you have a slightly longer time frame than a week or a month, it might be a time to step in. And I still like the energy complex. I think you have supply-demand issues there, so that while the XLE has sold off dramatically and we're getting dramatic sell-offs in oil, this is a good time to own that over the winter.
Well, you certainly have declines of 20%, 25% year to date. Dow closing at the lowest level since 2020 last